After a massive red week, the market shows signs of life. Riz and I are going to talk about where we're headed this week. Good evening, my fellow Riz Elite members and all of our subscribers here on YouTube. Welcome to our Elite webinar. Now, if you're watching us on YouTube and you want to get more content like this, you want to be ahead of the market, make sure that you're ready to attack the market come Monday, then make sure you hit that like and subscribe button for us. Hit the bell icon next to it to get notified every time we upload a new webinar because you're not going to want to miss what's coming next. But I've got the man Riz here with me tonight. Riz, how you doing?
Doing good, Chris. Yourself?
Doing fantastic. Glad you're here because, man, we have had a choppy week. Now, obviously, last week was, pretty much all red. And not pretty much, it was all red. It was red candles for the entire week. Going into Friday, looked like we were going to have a really, really bearish push below this 5,000. Was looking like maybe we might kind of, make a test of 4,900 here, maybe in a week or so. No, the market said no. People came in. We had, people buying the dip. We had earnings coming in, and that really kind of pushed the market back up. We had a little bit of a, we weren't really sure so much on Monday, but then, Tuesday, Wednesday, nice, move towards the upside. Had some pretty big dips on Thursday, but then Friday, we finished the week green. Now, Riz, obviously, a lot of this is pushed by earnings, which we kind of talked about last week.
Yeah, absolutely. It's earnings season. We're in full swing, and yeah, it's pretty much predominantly due to the big earnings that we've seen these big markets push. We saw Facebook with like a nearly 15% drop after their earnings, which obviously pulled the market back a bit on Thursday, but then we had after the close, we had Microsoft and Google, which both did great, especially Google with one of the largest gainers in about I would say maybe like I think 5, 6 years, maybe even more, on one of the largest big days it's ever had in a really long time. So from a market cap standpoint, not just a percentage standpoint. So it's tremendous. Obviously Google just big breakout. Had a good earnings. But of course, that kind of move is always tough to be able to tell beforehand. Obviously, when we're looking at it, like, oh yeah, of course they're going to beat earnings, but we don't know by how much. We don't know how they're going to, guidance is going to be, and we don't know how much it's going to move. So these are always things that look easy to see after the fact, right? But
Oh,
I
yeah.
always tell people, I always caution people, look, earnings are 50-50, and then the resulting move after the earnings itself is also a 50-50. So there really is no edge in quote unquote playing earnings, right? So with that said, a tremendous week in terms of volatility, but of course it was a solid green week for the market. Big recovery. One of the largest gainers for the week in the S&P 500 in I think the last few months. So it's like you said, we thought, we're gonna see that continuation below towards the 4,900 level, but nope, the market had other plans, primarily due to earnings there. But we continue to be in earnings season. This coming week is also a pretty packed schedule. So it's gonna be interesting to see what direction the market continues in. We know that when it comes to earnings, results for the individual companies, technicals kind of don't really matter. They go out the
Hmm.
window. So for anyone thinking, okay, well, here's support and resistance on so and so stock. Sure, that's good to know, but when it comes to earnings results, usually they can either be blown out the water in the upside or the downside.
Yeah, it's really a coin flip with earnings. And, I think the thing that's so telling about like Meta specifically, I mean, you look at the earnings results and everything looks great, but guidance wasn't so hot. And, you could have been like, oh, I think Meta's going to beat earnings. And if you had said that, you would have been right. But if you took a long position, you're going to be hurting right now because, guidance wasn't as good as they were expecting and they got sold off.
Yeah, that's I'm glad you mentioned that. Like, great example just with Meta here. Like, The market's looking at a lot of things. The earnings calls, the actual numbers, of course, are one thing. Guidance is another, as you mentioned. But even what's said on conference calls, the earnings calls itself, with either the CEOs, CFOs, in this case, Mark Zuckerberg, went and said, look, there is a lot of cash burn. Uh, just like how it was with the metaverse stuff. There's a lot of cash burn now with the Meta AI stuff now, right? So I think from 2020 to now, Meta, just a little stat for you guys, has burned like about $40 billion just in like investments in the metaverse stuff, and now more recently in the AI stuff, right? So it's been pretty wild, and I guess the market, once they heard that not that stat, but the fact that there could be more heavy investment into the AI side for Meta, because as they try and play catch up and kind of differentiate with their own AI models and kind of get those released, they're obviously going to require subsequent increase in investments, capital expenditures there. So that's one of the reasons why the market reacted the way it did with Meta, which for a what is it? I think it's like a how big is Meta from before? Well, right now it's probably, how much is it from a market cap standpoint? Like probably how many
Isn't it?
billions are we looking at here? Jesus, they changed a whole bunch here.
Yeah, they did quite a bit. I
Yeah, they
will
don't
look
even.
that up, and market cap
Yeah,
1.12 trillion.
1.1. Yeah, that's after
Yep.
kind of that 10%, 12% haircut. So if you really think about it, that's a big drop from a market cap standpoint, not just a percentage standpoint, but a market cap standpoint. Imagine losing 100 billion in market cap in a day, right? So it was pretty sizable. And then on the flip side, we had Google, right, with some positive numbers and guidance there. So interesting week nonetheless, as we spoke about, and then it finally broke above the 2 trillion market cap. So the first time breaching that level, as you can see, and of course all-time highs as well.
Heck of a move. Oh, I'll basically almost closed right at 10% just on the day, just on that one earnings call. So really, really big move there. All right, let's go ahead and take a look at the breakdown here for the S&P 500 and see who the big winners and losers were this week with all those earnings being reported. And, with tech and obviously Google being included in that, seen a really big run up this week going into the close on Friday. You see that huge move there, predominantly pushed up by, Microsoft and Google there, Google especially, making that big move. Still underperforming the S&P 500 index so far this year, represented here by the SPY ETF. But what's overperforming? Well, that would be financials. We've got communications and we've got energy really kind of leading the way. A bit of a dip here in communications. Kind of feel that might be a little bit of Facebook related there, but a very nice recovery here, kind of going into Friday. We still have consumer staples, utilities nice and above the zero line here, making a nice big push. We talked about that last week a little bit. Healthcare right around that zero, as well as consumer discretionary, and then real estate just in the toilet, for lack of a better term, really underperforming, almost 10% down on the year. So that is a big loser so far. But as you can see, the S&P 500 really being propped up by all of these, securities here, and the sectors, I should say, that are, really performing well. Riz, what are you seeing here that we didn't cover?
Yeah, I think like you said, you touched on pretty much everything here in terms of tech kind of just being a little bit below, making a little bit of a recovery, but of course driven by of course the earnings from Microsoft and Google, more recently with that prop up for both markets and that sector. Not surprised that we have energy still continuing to lead. Financials kind of just coming back strong.
Yeah.
The past week and a half is what's really kind of interesting here. But everything else kind of just pretty much par for the course.
Yeah, for sure. Now let's talk about energy. Let's go ahead and take a look at that chart for oil. Now, oil has been on this nice uptrend here since right about the end of last year, about mid-December last year. Oil has just been making this slow rise here until we got to right around this 85 area. Had a little bit of trouble with that. We pushed over it initially and came back down last week. and just kind of continuing that slow melt upwards. But what is not melting upwards? That would be gold. People, I guess, are melting gold because gold is going to the moon, as they say. However, we are starting to look like maybe we're slowing down a little bit. Last week, obviously, we closed near all-time highs on gold. Actually, I think we did close all-time high on gold. Yeah, it looks like we did almost to 2,400 an ounce. This week, we saw a bit of a retracement here. So maybe a little bit of sanity returning to the gold market. We'll have to see this week. But yeah, I mean, Riz, oil looking really good kind of going into the travel months here coming up soon. I mean, I know things are warming up where I'm at. I think people are going to start be hitting the road soon.
Yeah, you're right. Nice trend actually breaking away up to the upside from that trend line there. So that's definitely looking good. And like you said, gold, wow, still pretty extraordinary just to look at this move.
Yep.
Again, this is not common. I will say what's happened this year, well, at least from March, February, I should say, onwards is not normal type of move for something like a commodity like gold, right? Usually it's a slower mover, lower volatility, a lot of consolidations. But yeah, not saying that this kind of move is going to keep continuing, but I would say the fact that it's holding above here, wouldn't be surprised that we see a continuation and sideways a little bit before we kind of get some indication. Of course, it's all going to depend on kind of the word from the Fed as we go into the summer months and following into the end of Q2 eventually. But there's still some time for that.
Definitely time to go. And yeah, I think some consolidation here is definitely warranted after this parabolic move on gold. We'll have to see if that happens. Let's take a look here at the breakdown for the bond yield curves as well as the US dollar. So we're still looking at an inverted yield curve at this point with the short-term securities, bond securities being, we're talking here about, Treasury notes or Treasury bonds, excuse me. And so the 2 year is still outperforming everybody else right now. It looks like we closed on Friday at exactly 5% yield on a 2 year bond compared to a 30-year bond going there right around 4.778%. And then the 10 year is just in the toilet at this point compared to everything else. So we're still seeing that inverted yield curve at this point. The dollar continues to hold right around this 106 level. We made a very nice move at the beginning of April, very strong push up here into this right around the 17th. And then we've had a little bit of consolidation, which isn't too surprising if you ask me after a move like that. But yeah, Riz, are we ever going to see a normal yield curve again on these bonds? Because I feel like we've been inverted for years at this point.
Yeah, it's one of the longest yield curve inversions without seeing a recession, a
Mhm.
formal recession. So, yes, has it been inverted for a long time? Yes. Is it breaking records from a standpoint of being inverted and not seeing a recession yet? Because classically, all the times we see a yield curve inversion, usually I think it's like a year, maybe I would say 8 months or to a year lead time between the first time the yield curve inverts and then a recession. But we're past, like, I think we're like a year and a half in since we first got that yield curve inversion, and still the economy is chugging along. Not from the not from a firing hot, iron standpoint, but from a just chugging along. We did see a little bit of a weakness from the preliminary GDP numbers for Q1. And we did see some inflation metrics, some of the PCE stuff still continuing to hold. So we're kind of in a precarious situation in terms of inflation, the economy, and of course all the different asset classes like, stocks, bonds, US dollar and commodities. But again, we still have this big question mark. We have multiple question marks, which essentially puts that stamp being a even bigger question mark of what's to come. And it's not helped by the fact that we've got this yield curve that's been inverted, continues to be inverted, and no official recession yet. Does that mean we're not going to see one this year? I think it's still a bit too early to say that yet.
Yeah, Lord knows what the future holds for us as we're going into a very volatile year. Excuse me. Now, let's go ahead and take a look at some of those important dates in the market this week. But if you are here on the live webinar and you have a question for Riz, please go ahead and post that in the chat for me. Would really appreciate it because we've got some big announcements this week, to say the least. And that would be on Wednesday. Looks like nothing going on Monday, Tuesday, as far as big economic announcements are concerned. But the Fed interest rate decision, that's going to be your big announcement for the week. And of course, we are expecting a hold on interest rates. I think, man, I don't think they can raise rates at this point without everybody going absolutely nuts. So, yeah, I think a hold is a very safe decision, if you ask me. Then, of course, we got Powell's going to talk at 2:30. That's always good to get the market all riled up. See how he, discusses what's going on with that. And then on Friday, we've got the unemployment rate. That's definitely going to be a big one, going with that non-farm payrolls as well. Something to keep an eye on. But yeah, Riz, big date this week on Wednesday with the interest rate decision.
Yes, absolutely. You nailed it. Yeah, it's going to be interesting to see. Again, like you said, we're expecting a hold the market, especially the futures market for interest rates to dot plot. And of course, the bond yields as well, along with the US dollar, all signaling that we're going to be seeing a continuation of current rates being held for the next, maybe even the next few Fed meetings, right? We've seen since the beginning of the year, like, okay, February, March get pushed back, with the potential drop cut now being pushed back to June and now potentially September. So it's like a constantly adjusting kind of, I would say, goalpost, so to speak. And of course, week by week, that's changing. But for now, I think it's safe to say no rate hike, obviously, but also 99% sure we're not going to see a rate cut either.
Yeah, I think honestly, my jaw will hit the floor if they come out and say that they're going to drop rates this week or this month. I just don't see it happening, but stranger things have happened in the world. So speaking of some more big dates in the market, we've got earnings. So let's take a look at the earnings calendar, which is everybody's favorite. So Monday looks a bit slow, for if you ask me. I mean, of course, if you like pizza, Domino's is going to be reporting before the open on Monday. If you like playing with mice, excuse me, and keyboards, Logitech is going to be reporting after the close. Really not a whole lot going on here that I'm seeing on Monday, but Tuesday starts off the good stuff. We've got elite favorite PayPal reporting before the open, but also, of course, pharma giant Eli Lilly, 3M, McDonald's, Coca-Cola, all reporting before the open. After the close, big names right there. Amazon and AMD, those are the big ones. And of course, if you like coffee, hey, Starbucks is reporting. If you can call that coffee. Moving into Wednesday, we got Pfizer, we've got MasterCard, Wingstop, because I know everybody loves their boneless wings. I'm just joking. But of course, Kraft Heinz as well as another big name going on there. After the close, not exactly as exciting as the day before. Qualcomm's probably the big name there that we're going to be looking at. And then moving into Thursday, nobody's going to do anything until Apple reports after the close on Thursday, if you ask me. And that is the big name on Thursday. And then Friday, well, we got chocolate reporting, Hershey. And that looks to be about it to me. Riz, did I miss anything?
Nope, yeah, you're pretty much on the money there. We've got SMCI as well, Supermicro. That's been a big gainer in the semiconductor sort of server space, especially with all the AI hype uh the past few months. So it's been a massive gainer. So it's going to be interesting to see where that ends up as well. But yeah, you pretty much nailed all the big ones in terms of releases coming up.
Yeah, let's just go and take, since we talked about it, SMCI. Let's go ahead and just put that in there so people can see it. So yeah, definitely going kind of crazy here ever since about middle of January. Yeah, going from right around 300 now, currently at 857.44, closing out the day. Looks like we report Tuesday after the close. So that is going to be an interesting one for sure. Now, of course, the elite rule is we have to figure out how many times they mention AI on the conference call. That will determine, of course, I'm joking here, how well the stock does as far as earnings per share is concerned. So, all joking aside, definitely a big one on Tuesday there for sure in the semiconductor space.
Yep,
So,
absolutely.
yeah, go ahead.
Yeah, no, I was saying, yeah, you're right. Absolutely. It's going to be quite the interesting week. Pretty much, like you said, for AMD and the such. But and of course SMCI.
Yeah, definitely. I'm going to be interested to see what Amazon's going to do. Obviously, we had a bit of a dip here on Thursday, but nice recovery going into the close on Friday. So really nothing too much exciting going on there. But yeah, this earnings call will be interesting to say the least. This is a great question from Yas. Is there anything on your radar, Riz, that you're thinking about doing a swing on? So yeah, I guess this would be a great little question. Like, what are some things that people can keep an eye on this week?
Yeah, good question. I do have like kind of like a running list of things that I'm keeping a track on, but I will kind of mention a couple that I feel like are looking a little bit interesting. One of them being ACN, Accenture. This is a consulting firm, big consulting firm,
Mm,
obviously big sell off from the 390, 385 level. As you can see, kind of oversold here. Earnings are already done. Although the numbers were good, the guidance wasn't too ideal. The dividend X dates also come and gone. So pretty much most of those financial catalysts are done. Now it comes down to kind of seeing if it can hold this 308, even that 300 uh, full dollar mark round number coming up. We also have ZTS or Zoetis as like a animal. It's a kind of a veterinary animal health stock. So they have earnings coming up. The dividend has also happened, but as you can see, it's a strong, strong move from the 145 low there already.
oh
So this
yeah.
is something I've been keeping an eye on, but I don't want to say we've missed a move, but it's definitely seems like it's found that floor. Uh, Last but not least, another one. I'm not the biggest fan of this, but Lulu is one. Lululemon, big athletic wear brand. Definitely, I would say a big haircut from the highs. It was definitely like overvalued, overdone back when it was around the 500 level. But now, not saying it's like the best valuation wise, but still, even from a technical standpoint a decent setup, not the best, but decent. As we can see, always when we look back, we're like, yeah, ideally it would have been better to get in at 330-ish. But of course, that's hindsight. But the fact that it's found that kind of floor seems to be good. Uh, and of course, the caveat always is we also have to make sure that we're factoring in the market moves as well.
Yeah, for sure. That's definitely a big one. And yeah, definitely some great names there to keep an eye on. Of course, we're not suggesting that you just go ahead and buy those on Monday. Again, just something to keep a watch on. And of course, always evaluate your risk tolerance, your investment style before you take any position. Don't just take our word for it or anybody else's word for it. Always make your own decisions when you decide to get into a position. So definitely an important thing. So, all right, well, cool. I'm not seeing any other questions. I think that was a great, little recap there for the webinar. Riz, kind of going into this week, obviously earnings is a big catalyst. Then, of course, the Fed rate decision. Of course, we're not really expecting much out of that, but the market always jumps around when Powell's talking. What's your general strategy this week that you're going to be doing? Are you just going to be still kind of sitting on the sidelines, holding that cash pile that we've talked about, or you thinking maybe now's the time, or where are you at?
Yeah, yeah, I'm gonna continue to be sizable cash, but of course that's me, right? I'm not saying everyone needs to be the same percentage. Of course, for elite members, they see my real-time positions and the cash positions in the server, so that's always fantastic to see as I enter and exit different positions. But for me, yeah, I'm still gonna have that large cash component, but it's been a good year so far from taking gains, taking profits, positive trades, about 83, 84% win rate. We've kept, I would say, our risk management under pretty tight constraints, of course. Uh, Again, people could say, well, we could have let things run a little bit more, but of course, that's hindsight. I always want to kind of approach things from a capital preservation side of things. Others could be different, maybe they're trying to be more aggressive. But for me, I look at it from a capital preservation standpoint first and foremost. And of course, a risk-adjusted return. There's no point making a ton of money when you're pretty much risking the house or your entire account. So risk-adjusted returns are also key. And yeah, I'm going to continue to kind of scope for opportunities, but I continue to be a little bit more hesitant, as you said. not expecting a change in rates, but usually we do see quite a bit of volatility in and around that Fed decision day on Wednesday, right? And the market also kind of uh, not completely out of that kind of downtrend that we've kind of established coming into April, but definitely looks like it's recovering as their last week. But let's see, still in a little bit of a downtrend. Um, but you have that little upper. We're gonna at that trend line there. We're gonna be hitting up against along with the 50-day moving average as well. So, uh, two of those little things along with 5100 just closed right below the
Right on the
5100,
money.
right? So definitely interesting to see how that continues into this week. But yeah, I have a few stocks on watch, some good setups, couples that I've already shared with you. But if the opportunity is there and I feel like the market's suitable for doing so, then yeah, we're definitely going to potentially get in some trades.
You know, the beautiful part about this week is that if you want to know exactly what Riz is doing, we've reopened Elite to new members. So if you have been waiting, if you've been watching these webinars, you're like, oh, I wish I knew what Riz was doing. Now is the time. Link is down in the description to get on that, to get into Elite right now. And I'm telling you guys, this year is going to be wild and crazy. I have a feeling that Riz is going to be doing some awesome stuff. And if you want to be part of that, now is the time to get in while you still have that opportunity.
Absolutely. Yeah. Thanks for mentioning that. Yeah, we are open, accepting members, of course. As many people know already, we kind of just cap the numbers and eventually just close the doors. But just as of recently, we've opened the doors again as we head into the summer months, and definitely a lot of exciting things to come. It's been a great year so far. You know, knock on wood. I don't want to jinx it, but like you said, Chris, we're going to be in for quite the year. We got election year. We got a lot of catalysts coming. We got a lot of things up in the air, and of course, we're going to be there just taking opportunities. Been a lot of opportunities. I've done decently well as I've been very transparent with Elite in terms of my performance, and of course, outside of Elite on social media as well. Um, but yeah, so far I'm quite pleased.
Definitely, definitely. So make sure you get down there in that description, hit that link to get part of Elite and join us. We'll see you in the market on Monday.